Tesla posts an epic earnings beat. The FMCSA will no longer assume a commercial driver is always a human as it prods autonomous trucking. And we release a white paper about venture capital trends in the transport tech space. I'm JP.
And I'm Chad.
We discuss all these issues and more on this week's episode of What the Truck.
Hey man, great to be here with you.
What's up, dude?
What pop you topping?
Actually, today I have a Brooklyn Lager because no one went to the beer store, and I was really busy writing about earnings calls.
Well, that's why you're living the high life, man.
But I haven't tasted it yet. Let me see if this is going to like completely ruin my day or not.
Okay. Well, I don't think you can go wrong with Brooklyn Lager. It's a solid go-to.
Yeah, it's the like the Bud Light of Brooklyn.
Oh, is that a nice thing?
I mean, it's a lager. It's a lager.
Well, you haven't asked me what I'm drinking.
What are you having, Chad? Wow, got that slurp action.
I'm having a Sweetwater IPA because it was the only thing in the fridge. But hey, I like it, and I'm sticking on the IPA train.
Yeah, I mean, we're literally complaining about having free beer in the office, so let's keep our heads on straight.
First world problems, but they can still be a problem. Okay.
Well, dude, let's get into it, man. I think the biggest news
is the story
week.
You wrote about.
Well, I mean, it was a huge deal. It wasn't just me. Like, it happened yesterday. Craig, our CEO, basically told me to write it, so I wrote it. Tesla achieved profitability for the third quarter of
much to your chagrin
of its 15-year life. No, I'm happy for them. I don't think they still got a lot of work to do, but I mean, they posted earnings of like 320 million. Is that right?
That's million with an M.
311 million dollars in net earnings on 6.8 billion of top line revenue. The Wall Street was expecting them to lose money, and they made a bundle of money. That's really great. I mean, I think most
Elon Musk can't tweet about it.
What's impressive about it is all of the challenges the company faced with executive departures, with having to basically re-engineer their production and assembly processes on the fly, building that huge tent to add another line for the Model 3, the delivery issues they ran into, all that stuff. They overcame it. I mean, they buckled down. You could really see that not only was Elon Musk determined to figure this out, but give credit to everyone who works there, who've been busting their asses making these cars. Interesting stat. And this was actually, they trumpeted this on the first line of their release, but the Tesla Model 3 on a revenue basis is now the best-selling car in America.
Okay, that is interesting. I'm happy. I'm happy for the success of the company, as strange as the navigator of the ship has been.
Yeah.
And rumors of their demise were premature. Where do we begin? They're not out of the woods yet for a number of reasons, but the positive guidance, they're beginning to project that this could be a trend, that that their profitability might be sustainable and continue. I also was, as I'm thinking about Tesla and all of their successes, like if they failed, which it really seemed like it was going to happen, then would there be as much pressure on OEMs and big incumbents to continue to really try to push for electric vehicles? I feel like, even while it seemed like Tesla just wasn't going to ultimately overcome everything, that they were the spearhead. They were the tip of the point.
Yes. Yeah. They pushed, the automotive industry forward. They demonstrated that there was extremely high consumer demand for electric vehicles. They, are in the process of helping save the planet. I mean, it's important to acknowledge them and give the credit where credit is due, what they've been able to do for the automotive industry, and showing them the way, bleeding a lot of cash as they develop some really cool technology. But again, they're not out of the woods yet. So we said $311.5 million in net earnings this quarter. It's important to note that next quarter they have $230 million in convertible bonds related to Solar City due. So,
Okay.
if they make the same amount of profit next quarter, almost all of that would be eaten, by this debt. They have another, depending on what the stock price is, which went up 10%.
Right.
They're back up over 300. I think it's settled. It got as high as 317 when markets opened on Thursday. I think it settled around 312 in the afternoon when I wrote my piece. Huge deal. But if the stock price isn't over 360, they're going to have another $900 or so million of debt that they have to pay down in February, another convertible bond. So it's, and there are some things they still need to figure out. So, and I'll just go through two of them. One is that pretty much all of the equities analysts expect degradation in gross margins going forward, because basically what they're doing is they're making the most expensive souped up Model 3s right now that cost, over $50,000 a piece. And so when they start launching their $35,000 model,
The one that we all were excited about at the beginning.
yeah, they're going to be making less money per car. So
Makes sense.
So right now they sort of say that there's a rich mix of cars that they're producing in terms of how expensive they are. That is going to start to deteriorate next quarter. Secondly, this is kind of interesting, because for such a long time it was a huge deal whether Tesla could meet the goals that Elon Musk set, especially, and I'm talking about the 5,000 car per week production target. So there have been times when they have exceeded that, but for the past month, they're sitting around 4,400 cars per week, which is great. I mean, it's a big accomplishment, but this is, and I'll get to the point. Part of why they were able to achieve profitability this quarter is that they lowered their capital expenditures, sequentially. So what I'm wondering is, if they want to make more cars, are they going to have to spend more money, put more stuff in the factory, add additional assembly lines, and how will that affect, so they're making more cars that they'll be making less money on, and they're going to have to spend money to build out that production capacity. So that's another thing to keep our eyes on is, how much money is it going to take for them to keep ramping production up? Because they're kind of at this 4,400 number, and like I said, they've been stuck there for a month.
Well, I feel like you just brought me down after a potentially really exciting piece of news. So thanks a lot, man.
No, I mean,
I know. It's just a good,
like,
hard-nosed, pragmatic examination of the things coming up for them.
And I'll say one last thing about the stock price is that, now that we don't have to divide by negative numbers, we can see that their PE ratio, the ratio of price to earnings, is about 40.
Yeah, you've been wanting to say that for a long time.
And Ford and GM are around 5. So Tesla's really wildly overvalued right now. Most of the equities analysts still have it rated as a sell because they think that there's just no way that the company's valuation is not rational. So there's that to keep in mind too, is that, we want the company to do well. We want the inevitable electrification of the transportation industry to proceed in an orderly way. But we also think that, at some point the stock is going to fall back to earth.
All right. Well, easy for you to say. One of the things that Tesla was, but we didn't even hit on this, but, there is an aspect of their company that is about autonomous And that leads us into our next story, which is really cool. The FMCSA, the head of the FMCSA, just speaking, I think like yesterday at the Next Generation of Truck Freight Transport Summit in Philadelphia, Ray Martinez, he's like, the FMCSA, man, they're getting on board. They are doing they seem to be quick and agile and nimble, at least when they want to be, and they seem to want to be about autonomous. And they want to, as Martinez said, encourage innovation. And they really, downplayed all of the concerns about how this is going to replace drivers. And they just wanted to open up the space to, for the DOT to be looking at more guidance and encouragement for autonomous vehicles. They've released, DOT's AV 3.0 document earlier this month, talking about safety risks and compliance for how autonomous can be, not just state by state, but federally. So, basically, as the headline says, that we're no longer going to, assume that a commercial driver is always a human. We're constantly, JP, covering autonomous trends. We're constantly covering how tech, especially, what a year this has been. We got 2 more months of this year, and it's just been amazing. I have to say, and so here, I wouldn't have thought a year ago that I would be saying that the FMCSA is encouraging autonomous.
No, Ray Martinez has really, I think, taken the administration in a new direction. He's much more. I get the feeling that the FMCSA is listening to small fleets and owner-operators. The FMCSA is
them as well. That's good. It's good.
They're looking at regulations and thinking, how can we keep trucks moving, keep the economy rolling? How can we, what can we do to lead the charge to make supply chains more efficient and to make doing business easier? So it's kind of a different approach than we've had in prior years, where I think maybe some of the large carriers had undue influence, and there was a kind of a sort of I would say a inward myopic, bureaucratic kind of mindset about enforcement of laws and regulations. And
it seemed like things would be happening very slow if they ever changed at all.
It'd be happening slowly, and it would not be happening with the goal of, making the transportation industry work better.
And one of the interesting things, a response to Ray Martinez that got a little traction, the future has some people worried. There was a study by the University of Pennsylvania by a sociologist named Steve Viselli, who their study estimated that some gigantic 294,000 long-haul trucking jobs could be lost to automation. I don't know the details of that study or how, longitudinal it is. But, basically Martinez's response was, that what we've been typically trying to say is that, fully autonomous vehicles are probably decades away.
Yes.
If that really replaces the jobs, what we've actually been more recently seeing is that in the short to medium term, that you're going to be working collaboratively with whatever we want to call it, AI and autonomous. It's going to just make the hard parts of jobs easier, but we still have to facilitate how it works, and there's just, it's going to change, but there's going to be increased efficiencies. One of the things, in fact, that might get lost in the story is that Martinez was saying this could dramatically open up the hours of service regulations for drivers. That's been their big, problem.
It might not be completely exhausting to drive for 11 hours if the truck itself is doing 90% of the work. The other thing I would say about the sort of doomsday scenario of hundreds of thousands of out of work drivers, which I don't think will ever materialize,
I don't either.
is that, first of all, in the macro picture, think about all of the automation that's happened in the United States over the past 10, 15, 20 years. Right now, we're still at record low unemployment. Like, the economy...
Right, good point. There's this capacity issue that we keep talking about.
The economy creates jobs, and automation, digitization, and technology increase worker productivity, allows the same amount of people to do more.
So rather than...
And then industry specific, I would say that we all know that automation in warehousing is much, much further along than it is in actual transportation or driving. And yet employment for warehousing is growing exponentially.
Excellent point.
So I don't think that there's going to be some catastrophic event where all of a sudden every truck driver in America gets laid off.
Or they talk about this for a few years now. They've been talking about the singularity moment where everything's nobody has jobs and we're all sitting around, I guess, waiting for the redistribution checks to come along because nobody's employed. I actually disagree with that premise. To some extent, I think it's more about multiplicity. I think that there's going to be kind of exponentially expanding possibilities as a result of automation. Who knows? We're speculating. It's the future, but it seems like kind of cool things are happening. That we liked that headline of the week. Thought that was an interesting one. Another thing that we've done this week is released. Freight.tech has released a collaborative effort of a white paper, our very first white paper coming out of FreightWaves. It is what we're calling, the transport tech. It's the venture capital is trending hot right now.
Yeah, so
you want to give us an overview of that?
Yeah, I'll talk for a second just about Freight.tech. Jenny Xu, who came to us from, I think she was director of innovation at Goodyear or something like that. She came to us to help set this up. And basically what Freight.tech is, it's a kind of a startup and investor engagement platform. So the idea is that there's a lot of interest in transportation technology startups, but there aren't very many but transportation technology people aren't necessarily savvy when it comes to raising money, knowing what kinds of KPIs are important for different sorts of venture rounds, that kind of thing. And on the other side, there aren't that many venture capitalists who understand transportation and logistics and have a clear sense of where the opportunity is. So Freight.tech platform, we leverage our expertise on both sides of that. After all, we are a transport tech startup, and we coach companies, young startups, early stage startups, and we also set up investor conversations with those companies. We help educate venture capitalists about the industry. So our first Freight.tech's first white paper was really about making the case for transport tech as a venture capital marketplace. And what that means is that venture capitalists now look at transportation technology startups. They compete with each other over funding. It's a sort of identifiable field that has come into its own over the past 5 years. And so we wrote this white paper kind of mapping that out. And what it does, so it covers what are the trends in venture capital investment in transport tech companies since from 2014 until the end of third quarter 2018.
And while there has been a lot of growth in the industry since 2014, I think my assessment, being in covering everything this past year, such as we have, is that the extent to which the tech has taken over the industry is really surprising everyone.
Yeah.
I don't know that we saw it snowballing as exponentially quick as it has.
And so to give you guys an idea of the scale that we're talking about, the snowball, 2000 in the first 3 quarters of 2018, $2.68 billion was invested in transportation technology companies. That's more than 2014, 15, 16, and 17 combined. So we started off in 2014 with about 56 deals of all kinds, totaling $112 million, and now we're at 72 deals, which is actually a lower number. The deals were bigger.
But also, there's a little bit of maturation happening. There's not
Yeah.
as many initial startups. There's more Series
B,
A,
C.
B, and C funding.
Right. So the emphasis, there's still a healthy pipeline of early stage companies, but the emphasis is not completely dominated by seed rounds. You're starting to really get large, mature startups that are still attracting a lot of capital. And I would point to two really important 2018 deals. The first one is going to be Convoy's $185 million Series C, which brought them to a valuation of over $1 billion. That was, I believe, the biggest American Series C so far. The other deal is SoftBank Vision Fund's investment in the Manbang Group in China. And this story is pretty interesting, but basically what it was, there were sort of two Chinese Uber Freights, to put it simply. And they were both raising lots of money and expanding very rapidly. These two companies eventually merged, and then SoftBank put $1.9 billion into it. SoftBank, as you guys probably know, is run by the Japanese investor Masayoshi Son, who raised $100 billion for his fund. And they specialize in making very large bets on a late stage startups. He tells Bloomberg that he plans on raising $100 billion every few years, and so he is. It's very interesting. It's I think the sort of the marketplace. If you look at other late stage VC firms like like Sequoia, for example, like they're really having to adjust their strategies and do a little bit more work to find deals when we have like literally just this mountain of money that Masa Son is sitting on.
And I think that another reason why 2018 may have kind of hit us over the head, where we have that feeling is that right off the bat there weren't a whole lot of these deals, and it took a little while, and then once I think the Convoy thing happened, it's been a succession of events such as the white paper covers. And one of the things that the white paper covers is just like if you're at all needing some information about the industry, it's a complex. Logistics and transportation is very complex. And if you're a startup and you're just thinking about how do I raise the next fund, you can think about whether or not that's actually the most important thing to be assembling, and what is top of mind for everyone involved, both as an investor as well as starting it up.
Yeah, and so if you go to freightwaves.com, you can see there's a set under the resources tab at the very top of the page. You'll see white papers, and you can get to it from there. And we break down the whole industry. So like we talk about deal counts by type and by year. We also talk about deal sizes.
But it's not a gigantic white paper. It's sort of an initiation. It's no one else. We couldn't find anyone else really giving us data on this. So this is for the most part our own research, and
Yeah,
so
it's our own research. Jenny built out our data set based on PitchBook. It's got it's what, like how many pages is it? Like 10 pages.
10 pages with
some nice charts that just really show you like, okay, what happened to the size of Series A's from 2014 to 2018. What's the overall mix of A versus B versus C from 2014 to 2018? It's interesting, and it kind of paints the picture of a venture capital marketplace that's still in early stages. It's got some maturity. The pipeline is still really wide. For early stage, which means that I think, the winners haven't been really decided yet. There's some sort of big dogs in the ring now, but there's still lots of small bets being spread very widely, and people are, and there's a lot of capital looking for a home, in this sort of economic environment we're in, and it'll be interesting. I mean, we have many years left to see how these companies can scale and what kind of value proposition they're going to bring.
It's been a fascinating year. There was a trickle coming out of the dam, and in my estimation, the dam has broken. Like, I think that tech is on the radar screen. And
transport tech, especially.
Yes. Well, and so now it is time for everybody's favorite game, Big Deal or Little Deal. What's the deal with you, JP?
See, I'm out of practice. Zach and I didn't do this last week, so now it's like...
Actually, it was you and I. Thanks. I'm glad that I left such a deep resonating memory with you.
I'm thinking 2 weeks ago.
We didn't do it last week either, and so we're bringing back everyone's favorite game. And so, JP,
Big deal or little deal.
Right. And I'm going to begin with you. I think I'm going to, we're starting with you about right now. Are you ready to play?
I'm ready, Chad.
Okay. Ready or not, here we come. Rank and file blowback expected as UPS Teamster contract saga takes unusual turn. Big deal or little deal?
It's a big deal. This negotiation has been a cluster truck. The union ratified a contract that the members didn't approve, and now they're catching hell.
Freight forwarders tariffs broke peak season in two. Big deal or little deal?
Huge deal. It's made volumes really unpredictable, and transportation costs increase a lot.
Giant mosquitoes, a public health issue during Hurricane Michael cleanup. Big deal or little deal?
I think it's a big deal, and it's also terrifying. Don't read this article if you have any kind of fear of flying, biting insects.
Covenant rushes into dedicated, beats the street.
I think it's a big deal. They're moving from 32% dedicated to 50%, and they have plans to increase that proportion. It's an interesting model, and I think shippers really want dedicated capacity right now. Target lays down the e-commerce gauntlet, offers free 2-day shipping. Big deal or little deal?
It's a big deal. Consumers are high on everything. They're anticipating this. They're competing with Amazon, and I'm glad as a consumer. Big deal, Target.
Innovate or die, e-commerce in the iconic bankruptcy of Sears. Big deal or little deal?
It's a big deal because Sears is an American institution, and this is just another big chip in the retail apocalypse. It's all happening.
Keep Truckin's new headquarters expands investment in Nashville. Big deal or little deal?
I'm going to say big deal again. I'm full of big deals today, but it's because $3.6 million getting infused into their company. They're just expanding. It's taking jobs from the coast and bringing them to the heartland where there is a lot of tech and a lot of good real estate value.
Tennessee Tech admits results of glider kit study were inaccurate. Big deal or little deal?
It's a big deal because the little man keeps fighting against cronyism. So thank goodness that the truth came out. And I know I went over there saying that, but the truth came out on the Tennessee Tech kit, and I'm really curious about exactly how it all manifested, and we're still doing some research into how that went down. I totally blew it, dude. I'm sorry. It was my fault this time. It was my fault.
What am I going to do with you, Chad? It's okay.
Sometimes it's worth the extra sentence.
You know what we did? We knocked the rust off. Next week, I mean, God willing, we will get it in under 2 minutes.
God willing and the creek don't rise. All right. Well, thank you, everybody. As always, we go into more detail about each of the topics we've talked about today on our website, freightwaves.com. We will continue to publish this podcast weekly, so be sure to subscribe to What the Truck on Apple Podcasts, Google Play, Stitcher, and SoundCloud. Also, make sure to leave us a review to let us know what you think of our new podcast.
And if you're interested in freight economics and finance, come to our Market Waves conference at the Gaylord Texan Resort and Convention Center in Grapevine, Texas this November. Visit marketwaves18.com to learn more about this event.
That'll do it for today. Thanks for tuning in, and we will see you next week on What the truck?